morning and welcome to the room. Nice to have you guys. Good morning, Nanda. Nice to see ya. Guys, hope everybody's doing awesome today. Feeling good. Smiling for no particular reason. Good morning, Jeffrey. Good morning, Erla. I'm wound up. Just fair warning. I'm wound up. I'm in a good mood today. So you guys are stuck with me. Morning, Miss M. Nice to see you back. All right, we're gonna do some stuff today. Good morning, big dog. It feels silly calling you big dog, but I like it. What do you guys say we learn some patterns today? What do you guys say we completely relinquish control, don't try to make the market do what we want it to do, and just trade some high probability stuff and see what happens? That sounds like a plan. Let's see if that works out. Advantages, guys. All it is advantages. Everything we do is revolved around advantages. The first advantage that you can give yourself each and every morning is go to forexfactory.com/calendar. Take a look. Make sure there's not some news going on, guys. Have you ever watched what happens when news releases come out and they affect the market that you're trading? It's nuts. It can go sideways and up and down and crazy and fast and just untradeable. The NASDAQ was wild. If you guys are NASDAQ watchers, you saw it at news and it was pretty crazy. What did the S&P do at 8:30? Let's go look. Here's the S&P. Where's 8:30? Guys, this is a large chart on the S&P. There is my 8:30. All of that happened at the 8:30 hour from 97 all the way to 30, guys. This huge spike up took less than 60 seconds. That's pretty much untradeable. It's just too fast, and that's okay. But we knew that it was coming. Hey, good morning, Steve. And when you know that it's coming, you can sidestep. You can say, oh, okay, I don't want to be in front of that emotional roller coaster that's coming at me. Trains have whistles when they come to intersections, guys. That's your big warning. So every morning I check news and I say to myself, if there is high impact, if there is medium impact, I choose to not trade in front of the market. It takes away my advantage. Everything that I'm going to talk about today comes from the Nexgen website, specifically the trading guide. This is where all the answers are, guys. Everything that I talk about, you're going to find here. Everything that I give you comes from here. And I'm going to tell you, though, there's a lot. There's a lot of stuff on this page. There's a ton of information. And if you think you're going to become a professional day trader by reading this page, you're going to be like, oh my gosh, that's too much, Mark. How do people live like this? And they don't. They don't have to. Guys, we're going to keep it crazy simple today. We're going to keep it so focused. Hey, Crypto Farmer, I heard you'd be here today. Nice to see you. Knowing that I have new people too, we're going to keep it like hyper-focused today. I'm going to go to the glossary of common terms, and I'm going to scroll down a little bit. Sorry if that upsets anybody's inner workings. So the first hour of every classroom. Hey, Sakshi, long time no see. Good to see you in here. The first hour of every classroom is dedicated to a high probability trend trade. This is a trade that typically wins 70 to 80% of the time when you follow the rules. Guys, this is a trade defined as when each indicator on every chart agrees with the rules for the trade. Triggers are their strongest, no termination conditions exist, and there's not going to be anything between you and your target. Guys, this is the best of the best. This is the one that creates confidence. Because anything that wins 70 to 80% of the time, there's this old saying that says confidence comes from the memory of success, and that's exactly what we're creating here. But the most important thing that this high probability trend trade does for you guys is it's going to teach you to read your indicators. It's going to teach you to read your charts, and that's exactly what we're doing for the first hour, every hour. I am a broken record. I say the exact same thing. I provide the exact same tools. I give everything the exact same way for an hour every day. How come? Because I have a thick skull and I have to hear things 100 times, but then it clicks. And I believe that repetition is the key to recognition. So what we're going to do, those of you that want to be day traders, let's be chart readers first, and you'll be floored at the dividends that it pays. We're going to learn to read our charts with 3 rules on the high probability trend trade. And we do this because 90% of your day is doing nothing, guys. 90% of your day is chart reading, looking for those advantages that tell you that it's time to get into a trade. 10% of your day will actually be trading. I was up at 4:30 Central AM today. I opened up my charts, and guys, I took 3 trades this morning. That's it. 3 trades in 3 hours. That's not a lot of work, and it's a lot of doing nothing. And that's pretty much every day, guys. But once you're good at reading your indicators, once you can look at your charts and say, hey, this is exactly what they're telling me, you're going to understand these 3 concepts, and you're going to be floored at how effective you become with them. You're going to understand where the market is likely to continue. For you brand new users, for my first timers, guys, that's going to be your entry for the highest probability trend trade. You're going to understand where the market is likely to go. This is going to allow you to take profits at the right spot. This is going to allow you to get rid of that, oh, I hope it goes higher. You're going to get to the point where you say to yourself, I don't care if it goes higher. This is the place where I need to get paid. I'm so stinking good at this, I'll find another entry, because there's always another entry. And then you're going to understand where the market is likely to stop. And these likely to stop areas are what we call termination conditions. And they do just that. They terminate. They can stop the market's forward progress. So you're going to take 3 very basic concepts, guys. You're going to take 3 rules. That's all there is in a high probability trend trade. Do me a favor. Don't try to make up more rules or addendums. Learn these rules at their core value. Learn these rules, exactly what it means to when you say it, and then what those words look like. Each rule gives an advantage. The first rule, strong trigger lines, provides you the advantage of momentum. When you have momentum, this gives you a market where the odds are favorable for it to continue in the direction of the trend. Odds favorable momentum is what we're going to learn first, guys. You're going to be able to identify it. You're going to be able to study it. You're going to learn to commit to it. The second rule says termination's false. Not trading into any areas that may stop the market. And once you can identify these termination conditions, it behaves as a large red flag that says, hey, don't trade into this line. But when there's none present, you're going to have that advantage that we're going to call a clear path. Momentum and a clear path. Once you understand these 2 concepts, if you give me a week of studying momentum and clear path, guys, you have everything that you need to create a solid trading plan. Once you understand momentum and a clear path, you can be consistent. You can be profitable. You will find your entry. Your entry initially will be the entry for the highest probability trend trade, guys. This is rule number 3, and rule number 3 is specific to that high probability trend trade. It's going to define the entry area. It's going to pinpoint where the market is most likely to continue. So your third advantage is that entry area. That's what puts you into the market when you have momentum and when you have a clear path. These 3 rules come to be on only 2 charts. And I hear it a lot. Well, John Novak has these 3 charts. John Novak has these 4 charts. So-and-so has these charts. So-and-so has those charts. Guys, everybody's at a different spot. Everybody's doing things differently. Everybody has a different level of commitment to their study. So don't try to be like anybody else. Trust me on this one. Follow the basics. The high probability trend trade, Ron, I'll send you a nickel, is not your get-rich trade, ladies and gentlemen. But once you understand the high probability trend trade, you have the tools that you need to discover your get-rich trade. So we're going to look for these 3 rules on 2 charts, guys. And the large chart leads the way. The large chart is a very broad stroke of a brush. It's a slow-moving chart. It's difficult to see change on the large chart. Your large chart, and actually the first bar, the most current bar on the large chart, will define the direction of the market. It'll let you know which way you should be looking for rules to be met. It will define the momentum in the market through rule number 1, and it will define the areas that may be problematic through rule number 2. Your first 2 rules, 66% of your advantages come to be on the large chart. And when they're true, when they're met, when you have momentum and a clear path, then and only then do you go to the smaller, faster chart, the refinement chart. And guys, this is where you're going to pinpoint where the market is most likely to continue. On that smaller, faster chart, it's like an X-ray of one bar on the large chart. Here's my X-ray picture. Inside of this one bar on a large chart, there's an entire pullback, a bounce, and a continuation with the trend. If in the high probability trend trade, you're going to be able to pinpoint using the smaller, faster chart precisely where that little up push is most likely to fail. And that becomes your entry so that you can continue with the trend and the momentum. So this refinement process is going to allow you to reduce risk dramatically. It's also going to increase your profit potential because we wait for pullbacks, which means that we have even more room to our profit targets. So rule number 3 will be specific to the highest probability trend trade entry. And we use these two charts. Ask yourself, who am I trading with? Who am I trading against? The big chart is the big crowd. It's a large crowd. These are the men and women with more money than I'll ever have at their disposal. These are the people, they wake up, take a shower, have a cup of coffee, and they say, hey, you know what? Let's make the market go up today. And sure enough, the market goes up. And then maybe the next day, they're like, I think today it should go down. And they make it go down. And these are the people that create that momentum that we use. And these are the people that react to those key areas on the large chart. And guys, trading with the large crowd is like sitting in the lazy river at the MGM. You're sipping a pina colada and life is good. Everything's going your direction. And the moment you try to fight it, it's exhausting. So go with the flow. Follow the large crowd. Your small chart is the small crowd. Guys, the small crowd has money, influence. They have friends in high places. The small crowd can create pushes and shoves against that large crowd. That's that retracement that you see on the small chart. Guys, the small crowd fails typically 70 to 80% of the time, whether it's by design or whether they just get overwhelmed by the large crowd. You're going to be able to, through rule number 3, pinpoint where their failure is most likely to happen, because that is the place where the trend is most likely to continue. And if these guys lose 70 to 80% of the time, guys, if you embrace momentum, if you insist on a clear path, and you wait for their fight and enter at their failure point, guys, you're in a trade that typically wins 70 to 80% of the time. I had someone tell me once, Mark, that's not enough rules. Guys, is everybody cutting out or is it just Ron? Can you give me a Y if you can hear me okay? Gargle. Rob, you're clear? Earl is good. Jeffrey Dean's cutting out. Okay. Glitchy. All right. Give me a second. Okay, but we're back now. I don't think it's me. It might just be Discord. Good now? Okay, cool. I use the power of my mind to fix it. I had someone tell me once, Mark, that's not enough rules to be successful. Mark, that's not enough rules to be successful. There's no way that 3 rules on 2 charts could produce winners. Guys, I'm telling you, it's very doable. You just have to learn it, in my mind. So here's how the first hour goes. You guys that are brand new with me. The first hour is dedicated to learning the trigger line and the Fibonacci rules for when it's okay to trade. When it's okay to trade is a subtle way of saying when your rules are met, you should be so trusting of your rules that you enter without hesitation. The rules are met, enter the trade. It should also mean that you are such a firm believer in advantages that if your rules aren't met, you're going to convince yourself it's okay to not be in the market right now. It's okay to not enter this trade. I don't have the advantages I need. So we're really going to focus on rule adherence, guys. You can simulate. One of the cool things that Nexgen does for you is they give you a 100% complete working copy of the software. You have NinjaTrader to run it on. Guys, you can practice all day long. You can go back and forth, take trades, and just really learn the methodology in a very safe environment on that simulator. The first step in becoming a confident trader ASAP is doing that simulation, practicing, taking pictures, and then posting those pictures in the room, posting your trades in the room, telling me what you see, because my goal is to help you read your indicators so that you can make intelligent decisions. I don't tell you when to enter the market. I don't tell you when to exit the market, guys. That's not my job. It's illegal for me to give trading advice, and therefore I never do. But I'll teach you to read your indicators so that you can make these decisions for yourself. And every time you post in the room, if you do me the favor of addressing those 3 rules on your chart, if you talk about the momentum that you see, if you point out whether or not your path is clear, and then show me where you get in, but also where you get out, guys. Don't show me incomplete trades, because everything that happens from entry to exit lends itself to be a management lesson. And management plans grow as you grow. So if you post in the room, my job 15 hours every week is to give feedback, to teach you to read your indicators, to see what you're doing, to recognize patterns in you and help you correct them when they need correcting. We're going to simplify today. We're going to talk about the highest probability trend trade that you can take. We're going to focus on those 3 advantages. And once you understand the high probability trend trade, once you can recognize momentum, a clear path in an entry area, it opens the door for the second trade. And the second trade is what we call a medium probability trade. And this is when most of the indicators line up for a trade, however a small issue exists. Let issue be singular, guys. This will be the vast majority of your trades. But when you're doing these, you've got to take them and manage them assertively. It's your ability to read your indicators that's going to identify problems, that's going to allow you to manage assertively, that's going to identify trouble spots so that you can get paid at them and reduce your risk. So your high probability trend trade takes you to the medium probability trend trade, and then that takes you to the rest of the trades. You've got to figure out what looks you're going to commit to. There is a very definite pattern, and the pattern typically wins more than it loses. So your job in the beginning is just learn this pattern, break down the rules individually, piece them together, and understand what it looks like so that it becomes easy, so that it slows the market down. That's where the second piece of the puzzle to getting to where you want to be ASAP comes in, guys. That's using the spreadsheet that I give you every day. When you downloaded the software, it was put into a Nexgen study picks folder for you. Hey, good morning, Zorro. Guys, there are 5 tabs on this page. Your first tab is a trade tracking sheet. Just all it is a trade journal. Your job is to fill it out every time you take a trade. Annotate the chart, talk about your advantages, entries, exits, because you're creating a study guide. Repetition creates recognition. So there's some links on this second tab here. This is how you're going to study your trading journal, guys. How to paste those links into the spreadsheet. It's pretty easy once you do it once or twice. There's a link that reminds you, if you want to get the most out of annotation, talk about the 3 rules. Show your entries, show your exits. Give me the opportunity to see everything that you're thinking so that we can make sure that your thinking is in line with what it should be. And then the most important thing, and probably the most neglected thing, is go back and study the trades that you took yesterday. What worked for you? What didn't work for you? What felt forced? What was relaxed? And what you're going to find is that the better you become with recognizing advantages, the easier the trades become. The less stress you feel, the less inclined you are to move stops and targets unnecessarily. And the more you learn your rules, you're also going to find that you're going to begin to feel nervous when you force a trade, when you break your rules, because you know that you're forfeiting advantages. So you're going to learn to talk to yourself about those advantages each and every trade. And guys, you're going to start to recognize patterns that are bringing you success, whether it's a pattern in the market or a pattern in yourself. And the same is true with what's robbing that success. The one thing that I'm good at, and I'm only good at one thing, guys, is recognizing the patterns in you. If you give me 4 or 5 charts and you tell me what you see, we're going to know how to fix what's broken. We're going to see what your tendencies are, and we're going to find a way to correct them together, guys. And that's really what makes the class great, is your questions and your charts, because I've been reading these indicators and working with day traders for the last 5 years, and there's nothing that I haven't seen, guys. There's no mistake you can make that's unique to you, I don't think. And chances are I've made it 100 times and learned how to fix it. Give me the opportunity to help you fix it. There's the 101 tab. This is where the rules for the high probability trend trade are highlighted in green individually. Strong triggers, clear path, entry. And then I think it's equally as important to understand when your rules aren't there, guys, when you shouldn't be taking a trade. So we have the opposite of strong triggers, weak triggers, and we have those termination conditions. I'm going to give you a sheet that helps you fill this out so that you can get to where you want to be faster. There's the client trade section. Thank you guys for this. This is all your hard work. The client trade section is just that. It's me stealing the stuff that you guys are putting in the room. Hey Mark, here's a trade. It follows the rules, and I'm gonna be like, holy smokes. I think we stole one from Kurt yesterday, maybe. I don't remember. We stole one from somebody. Maybe it was Tracy. But Tracy posted in the room and goes, Mark, check this out. This is everything that we look for, everything that you talk about every morning. And I said, holy smokes, Tracy, let me put this in here so that you guys can study it, so you can go back and look at it so that these looks become easy. There's the entry sequences for the longs and shorts, 400 pictures of you guys being brilliant. There's a very mechanical management plan, and I'm going to give this to you in the written plan that I provide. Here it is visually. Reasons to grow your management plan. And then once you can read your indicators, you start to see patterns. You're going to start to see things. You're going to begin to recognize opportunities. You're going to be able to recognize challenges. And very often what happens is you start to incorporate your personal chart reads into your personal trading plan. So all of these pictures that you take of patterns, guys, you're going to fill up your section. That's what the last section is. This is M's section and J's section and James' section. This is going to be Crypto Farmer's section. You're going to start to see patterns that speak to you, that become your trades. Fill up the green section so you know exactly what it looks like. Learn how to manage your trades, guys. I'm going to give you a plan in the beginning, but you're going to grow from it. And then as you begin to see these patterns, start taking pictures. The easiest way to get to where you want to be, I firmly believe this, is not taking the trades, putting that anxiety, that stress on you, but going back and taking pictures over and over and over, guys. And the people that take the most pictures, that annotate their charts with what they see, these are the people that tend to get to where they want to be the fastest. Guys, I'm at 6,765 pictures this year. Almost 7,000 pictures in 11 months. That's not so bad. That's almost 700 pictures a month, guys. It's difficult to not recognize patterns if you spend time studying patterns. So, we're going to get to work, guys. Everything begins with learning the rules. So we're going to keep it real simple. We're going to talk about them, where to find them, what they look like. Rule number 1 says that the large chart needs strong triggers. Guys, remember, the large chart leads the way. It will define direction, momentum, and areas. Strong trigger lines is our first rule because it gives us momentum. So let's talk trend. When the large chart says up, the background is green. Green means up. Red means down. Go with the flow. When the background is green and the market says up, guys, both your small triggers, the solid lines, and the large triggers, the dashed lines, well, they have to be green too. If they're not, you don't have strong triggers. Strong triggers means that the smalls have broken above and away from the large triggers. The large triggers are wide. They're angled in the direction of the trend, guys. And when I have this look up, the odds are favorable for the market to continue up. And in that downtrend, when the small triggers break below the large triggers, both are wide, angled in the direction of the trend. Once the colors match, guys, the space lets me know that the odds are favorable for the market to continue down. Odds favorable momentum is the battle cry in this room, guys. Odds favorable momentum. You're going to see it on charts and annotations. You're going to see OFM over and over, guys. And what you're going to recognize if you're paying attention is that most of the winning trades presented in this room have odds favorable momentum. This is rule number 1, guys. Momentum pushes a market. Momentum can break key areas. Momentum can cover mistakes. When I have momentum on the large chart, that one bar sometimes sprouts a tail and then heads the other direction. You're going to be able to use that refinement chart with the odds favorable momentum, and you'll pinpoint precisely where this tail is most likely to form. And guys, these are going to be a study tool Because when the momentum is up and the tail is formed, that's your pullback on a smaller, faster chart to Fibonacci support. That's typically the pullback on your smaller, faster chart to Fibonacci resistance. So remember these tails with all that momentum. We're going to go back and study them a little bit. And guys, a lot of times I say to recognize momentum, I want you to think of scissors open. The blades separate, small's above the large, gap between the two. I can cut, I can get some work done. Going down, the scissors are open. The space is there, I can get some work done. Guys, when the small triggers work their way back inside of the large triggers, this is a weakening of the trend. This is a weakening of the momentum, guys. This is what we call weak triggers. Strong versus weak. Odds favorable for the market to continue down. And look at the words associated. Anything can happen. Guys, when I have weak triggers, anything can happen. I can get a big ugly retracement from the middle of nowhere. When I have weak triggers, the market is more likely to reverse at key Fibonacci areas. So there's really only two looks. Don't complicate it. As long as there is space between the small and the large. Let's take a picture. I really want to get this, guys. This is so important. So this will be strong triggers down. From the point of separation until they return, this is strong triggers. This is the small below the large, all red. Space means strong. Rule 1 met, odds favorable momentum. How's that for a lot of words for one look, guys? This is your entire range. And you'll notice that the market pushed down. And you'll notice that key areas broke. Guys, your job is to take these pictures, to go back, to commit it to memory, to understand what strength looks like. And then just for grins, look at that. There's the smalls inside of the large. So let's go ahead and type this one out too. We'll get both sides of the coin. Small inside of large, weakness, anything can happen. Rule 1 not met. Look at the retracement. You didn't have to get caught there. You didn't have to take a trade without the advantage of momentum. And guys, this is exactly what you're going to do. You're going to take these pictures, you're going to upload them, and you're going to go to your 101 section, guys. And now we have another picture to put in the strength. And the cool thing is we have the exact same picture to put into the weakness. We have two pictures to make us a little bit smarter, to create the recognition, to make sure we understand what we're looking for and what the words mean. So guys, is everybody good with that? Give me a Y in the room if you're comfortable. Strong triggers is always strong triggers. Strong triggers push. There's some of those tails. Strong triggers push. Strong triggers push. Weak triggers, guys, anything can happen. Everything is about advantages. And I want you to be able to look at that most current bar and say to yourself, I do not have the advantage of momentum. It's okay to sit on my hands. Once I have momentum, let's make sure that the path is clear. Let's make sure that we're not trading into areas. And guys, all of these pictures that I give you or that you're seeing in my little slideshow here, I will give you, I promise. Termination conditions are Fibonacci-based indicators that may reverse the market, guys. And this is done with a comparison of the area and those trigger lines, the same trigger lines that create momentum. Potential termination conditions, or targets really, guys, it's nothing more than horizontal lines on your large chart. So you guys that are new to me, you are about to get your mind blown because you're going to understand where that large crowd is most likely to make decisions. You're going to see it long before the market ever gets there. And you're going to have a simple recipe to understand whether it's time to pump the brakes or take the next trade. The areas on the large chart that may stop the market, the areas on the large chart that may create a reversal, the areas on the large chart that may create a fight between the buyers and sellers, guys, we're looking for divergence, highs and lows. And divergence means that the market went up, and if the sellers steal the momentum from the buyers and push it down, you're going to see a magenta line form. This magenta line becomes a line in the sand, and if the buyers try to reach it a second time, it could stop the market. Cyan lines are the same thing, opposite direction. Market goes down, the buyers steal the momentum from the sellers. We know that right around the third bar. If this cyan line prints, it becomes a line in the sand. And you can see over here, that line in the sand is exactly where the sellers stop the buyer cold. And this line in the sand is precisely where they have the potential to stop the seller. So we're going to look for those. We're going to look for red Fibonacci resistance. When the market's trending up, this is an area, a great spot to take profits, but this is an area that may stop the market, create an untradeable bounce, or even reverse it completely. Blue Fibonacci support, same thing, other direction. And then we have these yellow 1-to-1s, guys. These are 100% Fibonacci alternates. These are fibs that print real time during the day, and these areas are very key. And when the market is trending up, they can behave as resistance, and when the market is trending down, they can behave as support. Rules are established for this high probability trend trade based on patterns that repeat themselves and either increase the likelihood of winning because they win more than they lose, that's how they become rules, or decrease the likelihood of winning because when you reach a termination condition, you're apt to lose more than you win. So we have to learn to identify them. If the areas on the large chart are where the large crowd are making decisions, the first piece of the puzzle is allowing price to reach the area. Allow price, uptrend, everything's going, and then it reaches Fibonacci resistance. It reaches a divergence high. It reaches yellow 1-to-1s. When price reaches resistance, the only thing that you have to do is ask yourself, where are my triggers? And if your triggers remain below resistance, guys, it's a termination condition. It could stop the market cold. It could create an ugly fight between buyers and sellers, and it could reverse the market completely. If it reverses the market completely, we're going to call that a strong top. And a strong top is the precursor to the highest probability trend trade short you could ever take. Market continues down, momentum is cranking, it starts to weaken, it reaches Fibonacci support. When it reaches Fibonacci support, all you have to do is ask yourself, where are my triggers? And if your triggers remain above that line, this is a termination condition. It may stop the market. It may create a fight. It may reverse it completely. And if it does, we'll call it a strong bottom. And a strong bottom is the precursor to the highest probability trend trade you can take long. And it's really pretty simple, guys. If price reaches a line, where are the triggers? You just got to sit on your hands. They didn't break resistance and down it goes. They couldn't make it through support and up it went. Weak triggers gave you the retracement back. Look at the bounce off of support directly to resistance and weak triggers right back into support. Oh my gosh. When I combine trigger lines along with key areas, guys, I've got this recipe to keep myself out of trouble. I know precisely where the decisions might be made. Areas break all the time. Areas break. Let them break. Force them to break. Demand that they break rather than trading into them. An area is considered broken. The path is considered clear. When your small triggers and your large triggers get to the other side of the line that was problematic. So price reaches Fibonacci support. The triggers don't break. Sit on your hands. There's nothing to do. Let's wait for the decisions to be made. If both small and large get below support, small and large get below support, support is now broken. It has nothing to do with fib color. It has everything to do with triggers. It has nothing to do with price bars. It has everything to do with triggers. Small and large get below support. Support is now resistance. The path is now clear. Your path remains clear until you reach the next area, and then the process starts over. Price reaches Fibonacci resistance, and holy smokes, my triggers are 3 days below. I've got to sit on my hands because I don't know what the reaction is going to be. I sit on my hands for almost 15 bars worth of information until both the small and the large get above resistance. Once they get above resistance, resistance will now behave as support. The path is now clear, and the path remains clear until I reach the next area. So what's it look like when a path clears? Smalls and large get above support. Support is now behaving as resistance until I reach the next area. And look how resistance behaved as support. Resistance became support. The triggers didn't break. Both of these areas held and pushed it right up to the next area of resistance. Smalls and large get above the divergence high. The path is clear. The path remains clear until we reach resistance in 1-to-1s. Guys, if you're brand new, you either have a clear path or you have a termination condition. Give me 5 days. 5 days to know the difference. Go take 20 pictures. Post them in the room. Hey, Mark, this is a clear path. Let's confirm it. Let's make sure you're reading it right. Because what happens is understanding the high probability trend trade concepts, the termination of the clear path, this is what sets you up for your first medium probability trade. Guys, the medium probability trade means that most of your charts agree. However, an issue exists. Your issue is going to be that the area is not broken. It only has the potential to break. Your trigger lines are going to show you that potential through odds favorable momentum, through their location. So when the smalls break through Fibonacci support with odds favorable momentum, 50% of my triggers are through. But my large triggers remain above support. They're lagging behind. 50% are not. We call this a 50-50 trade, guys. And everyone's like, well, if it's a 50-50 trade, I'll win half of them. Guys, it's not a reference to your chances of success. It is just identifying. So watch this. We can call this a smalls below and a large above trade. You can take the numbers right out of it. You could call it a straddle trade. You could call it the large not through trade. But the reality is what this means to you is that this blue fib has the potential to break because of the momentum, because momentum can break areas. So if you decide to take an entry based on that potential, you're not taking a trade with a clear path. And if you're not taking a trade with a clear path, ladies and gentlemen, we can never call it a high probability trend trade. Your ability to look at your charts and speak out loud about these advantages, you're going to say, I don't have a clear path. I have to insist on momentum. I have to make sure that my entry is a low risk because I'm only trading potential, guys. This will be your second trade. I will give you a plan that optimizes your chances of success with this setup. This is the most lost trade among new users because the adrenaline starts kicking and you don't pay attention to more advantages being given up. So I'm going to give you a rock solid plan for this one. All right, new users. Crypto farmer, you're going to hate this part. Everybody does. Guys, there's going to be times when your path isn't clear because the areas are stacked. You're going to have to sit still. This is 90% of your day. 90% of your day is spent waiting. 90% of your day is doing nothing, guys. In the futures markets, I said billions every day. I need to fix this picture. The futures markets trade trillions every day. The futures markets average $220 billion every hour. You have to capture $400 and put it in your account every morning to be in a six-figure income from your trading, guys. That's it, 400 out of trillions. Just a drop in the bucket. So be patient, wait for the best of the best. Let areas clear. Don't hit the next area. Find a way to capitalize in between these key areas with momentum. Guys, it's not necessary to be in every move. Fibonacci gives you the ability to see where the driving forces of the market are likely to make decisions. Fibonacci gives you the ability to recognize where the large chart is most likely to make decisions. Guys, the market has a memory. And very often, rule number 2 can keep you out of consolidation and chop. 90% of your day is doing nothing. 10% is trading, guys. Rule number 2 is the most broken rule for new users. Rule number 2 is the rule that forces you to be patient, that keeps you from taking trades directly into key areas. And look at this, from support to resistance to support to resistance to support. Rule number 2 is going to keep you from hoping it goes up or wishing it would go down. You have such a clear line. One of these needs to break. And when it does, guys, let's go rock star. Give me a Y if you can hear me, ladies and gentlemen. Anybody? Everybody? All right. So it's going to be Wayne. Right on. And guys, this is a good one for my newer users. If you ever can't hear me, just go, hey Mark, sound check. And I'll ask the room, guys, can you hear me? And if you see that flood of Y's, it means that it's on your end. And typically a reboot is enough to get you back where you want to be. So, rule number one, let's get momentum, guys. Strong trigger lines. It's easy to recognize. It takes 3 minutes to learn the lesson. It takes a lifetime to commit to because it doesn't happen all day. You got to wait for it. Rule number two says don't trade into those lines that could stop the market. It's an easy recipe. Price reaches the area. Where are my triggers? Can you guys give me a why? If you're with me so far. Large chart has defined the trend. Large chart has defined the momentum. Large chart has defined the areas. My first two rules are true. I'm going to go to my small chart, my refinement chart. I'm going to look for an entry. And guys, I feel compelled. I have to say this real quick before I go to the entry rules. If you're brand new in this room, this is day one. Every time. That's me on day one. I want you to be okay with that. And I know that's hard, but I wanted to say that because I do have new people and there's a lot coming at you. That's why I do the same thing every hour for the first hour every day. Because we're gonna get that repetition. So trust me, day one, you're like, what the actual F? By day four, the language makes sense and things start to click. By day six, you know that it works and you just have to learn how to work it. So if you're feeling a little overwhelmed, guys, it's cool. You're all right. Large chart has defined my direction. Large chart has provided momentum. Large chart has a clear path. I'm gonna go to my small chart and look for an entry. Guys, before we discuss entries, we're going to talk about one more termination condition. This is the only time that I will ever let my entry chart talk me out of a high probability trend trade. This is the only time I will choose not to pull the trigger when I have momentum and a clear path, guys. And that is 3 divergences in the same price range. It may terminate the trend. 3 times that momentum is stolen. 3 times that there's a loss of momentum in the market. And guys, that's all divergence is. Did that not take the picture? Take that picture. There we go. The market goes down and the market goes up. The market goes down and the market goes up, and it does it 3 times, guys. If at each of those pivots I lose momentum, I see a cyan line. If at each of those pivots I see a divergence, letting me know there's a loss of momentum, this is my small chart saying to me, hey Mark, they're slowing down. You're not going to see it on the large chart, but trust me here. There's a slowdown. There's a loss of momentum. There's a fight happening. Guys, 3 divergences in the same price range is the only time rule number 2 is not met because of the small chart. But if those 3 divergences aren't present, guys, we're going to find that precision entry. We are going to define where the small crowd is most likely to fail. We're going to pinpoint where the market is most likely to continue, guys. And we're going to do it with such accuracy that you're going to use a limit order. You're going to wait for the market to come to you. And you're going to wait at an area, fibs, midbands, and yellow 1-to-1s. And you're going to insist that those areas are inside of triggers. The easiest trigger look is what we call favorable large triggers. And that means that the large triggers and the synthetic triggers on your small chart are overlapping. Like 2 snakes riding piggyback, guys. And these large triggers on any chart are where price is likely to return. It's a correction point. On a large chart, let's pull it back up. When price breaks away from the large triggers, it typically comes back. When price breaks away from the large triggers, it typically comes back. Price breaks away from the large triggers, it typically comes back. That's your correction point on the large chart. On your small chart, it does the exact same thing. It just pulls back to the large triggers on the small chart. So when those two are overlapping on your entry chart, guys, you have the smallest range where the market is likely to return, where it's likely to correct. And I want you to use that language. This is my correction point. It may come to the top of the triggers and it may go to the bottom of the triggers. I never know. It may go to the large, it may go to the synthetic. I never know. So when they're overlapping, it takes the indecision out. When you have fibs, midbands, or yellow 1-to-1s inside of those favorable large triggers, guys, this is your brick wall and price is your tennis ball. It's the areas inside of triggers that I anticipate to create that bounce, that continuation with the trend, where the small crowd is most likely to fail. So every time I look for an entry, I have momentum, my path is clear, and life is good, and I look at my small chart and I say, okay, price may return to the large triggers, price may return to the synthetic triggers. This is my zone of correction. This is where the price bars may end up. And then I'm going to say, it's the areas inside of those favorable large triggers that are most likely to create the bounce. Whether it is a fib, a mid-band, or a yellow one-to-one, they are all equally as important. None has weight over the other, guys. It might be a one-to-one, it could be a mid-band, who knows? But the areas inside of triggers create what we call this little window, this window of opportunity, guys. And that's exactly what we've been leading up to for the last 40 minutes, is defining that window of opportunity, that point where the market is most likely to continue. So, when the large chart is going up, when the large chart has odds favorable momentum, when the large chart has a clear path, ladies and gentlemen, your fear of missing out is going to be like DEFCON 10, like crazy, in the red, about to blow the motor. You feel like your world is falling apart and you're never going to get paid. And then a reversal bar happens. This reversal bar is the beginning of the pullback, guys. This reversal bar is the beginning of the fight. This is the pattern. This is your pattern, your first pattern. Once the reversal bar prints, you have to remind yourself that your entries don't come from a reversal bar against your direction. This signals the beginning of the pullback. So you're going to look for those triggers, large and synthetic, one on top of the other. And you're going to say to yourself, this price may return to those triggers. And then you're going to take it a step further and you're going to say, but areas create a bounce. Fibs, mid-bands, and yellow one-to-ones. And when they're splayed a little bit, kind of away from each other, but inside of favorable large triggers, this is your window. I like to call it the window of opportunity. Sometimes you'll see it labeled as the woo, because I'm a big Ric Flair fan. Guys, your window of opportunity extends from the highest point of support to the lowest point of support inside of favorable large triggers. Latch hold of that language. It's going to pay dividends. Because of the momentum on the large chart, because there's nothing in the way on the large chart, guys, your entry is set a tick or two above that highest point of support. And at that point, you've done all you can do. You have insisted on momentum. You have demanded a clear path. You have pinpointed your entry. And if the small crowd has it in them, guys, you're going to get your entry for that highest probability trend trade. This is the one that typically wins 70 to 80% of the time. Any lines, any fibs, any mid-bands, any yellow one-to-ones on the wrong side of the triggers, below the triggers for a long trade, guys, this is not a part of the equation. This is not where the market's most likely to continue. Hell, we could call this where the market should not go. Because I expect it to correct to triggers, I expect it to bounce off of areas. If it comes all the way down here, I've lost my edge. I don't want to be in a trade there. So the large crowd sets a downtrend. The large crowd creates momentum. The large crowd hasn't reached an area to react. And the small crowd shows up to fight with a reversal bar. This is the beginning of the pullback. This is not your entry. Once you see this reversal bar, or when you start getting comfortable, you're going to start anticipating it, looking right, seeing where triggers are. You're going to find your triggers, large and synthetic, one on top of the other, angled in the direction of the trend. Two snakes riding piggyback. And you're going to say, that's not my entry. My entry comes from the areas inside. Areas inside of favorable large triggers are where the market is most likely to bounce. And because I only have one area inside of favorable large triggers, that makes my life easy. My limit order goes 2 ticks below it. And if the small crowd has it in them, guys, you're in that best of the best short trade. And anything on the wrong side of the triggers, anything above the trigger lines for a short trade, ladies and gentlemen, your advantage is gone. The edge is gone. You're not looking for entries here. This is where the market should not go. If you give me 20 days, I say 20 days. Most people don't need it. Some people need more. I don't know. It doesn't matter. We're all on our own time frames. If you give me 20 days to where you can pinpoint where the market is most likely to continue, guys, it sets you up for your first management. And your initial stops are placed where the market should not go. This is where language becomes important. The market should not go beyond the correction point. The market should not go beyond those trigger lines. This is where your first stop is going to be, generally 4 to 5 ticks, whatever makes you happy. 4 to 5 ticks beyond those trigger lines is your first stop placement, your initial stop placement. And guys, anything that wins 70 to 80% of the time, that stop is going to get hit 20 to 30% of the time. Your job is to develop such a trust in this look that you're willing to let your stop get hit 20 to 30% of the time and still take the next trade where the rules are met. But the great thing is you're trading with momentum, and you're trading with a clear path, and you're trading with this perfect entry, and more often than not, you're going to get a reversal bar in the direction of your trade. You're going to get what we call a confirmation bar. And once you get that confirmation bar, you can reduce your risk 2 ticks below, 2 ticks above. And it's not uncommon to see next-gen users taking these just freaking amazing sniper entries, and maybe it goes up a little bit, and they move their stop, and then the small crowd says, you know what? We really wanted it to go down. And losing $30 or $40 a contract instead of $200 to $300, holding these stops in desperation out in the middle of nowhere. So guys, this is what we talk about every morning. This is your first hour. It's a simple recipe. It's momentum, a clear path, and an entry. That's the recipe for a trade. You're going to do it on only 2 charts, guys. And direction, momentum, and termination conditions are given to you from the large chart. Your small chart is nothing but an entry chart. What we've just done is we've talked about the perfect, the best of the best, the highest probability, the one that teaches you to read your indicators, guys, the one that teaches you to understand when you have momentum because the smalls are below the large, the one that teaches you to recognize that price has not reached the next area and all my triggers are below that area of support, so my path is clear. And it lets me know that these areas right inside of those triggers are the point where the market is most likely to bounce if the small crowd has it in them to get there. And ladies and gentlemen, this is momentum and a clear path. There's my reversal bar. My entry is 2 ticks below, and I'm in. And my initial stop is 5 ticks above where the market should not go. And ladies and gentlemen, this is your highest probability trend trade. How cool that it sets up live. I'm going to give you a plan that says, hey, learn how to get paid at $100. Learn how to get paid at $200. And guys, I am not in control of anything. Whoop, I just made $100. I'm going to move my stop break even. Let's see if that momentum and clear path takes us to a $300 winner. I've got absolutely nothing to lose. Isn't it awesome when it happens live? Large chart says down. Large chart says clear path. Small chart define my entry to the absolute tick, ladies and gentlemen. And my second contract just hit my second target, guys. And that is a $300 trade. Does it work? You're gosh golly darn right it does work. So if you took that trade, nice job. Let's talk about it. Let's create a study tool. Did I have strong triggers? Yes, I did. Did I have a clear path? Yes, I did. And guys, this is the one that I think pays the highest dividends. Did I have an entry at an area inside, all caps, let's go all caps, inside a favorable large triggers? Hell yeah, I did. Guys, this is what we just talked about for an hour. You just watched it happen live. This is the trade, guys. Momentum, clear path, pullback, and get paid. Especially if you're a new user. Get paid. So to get to where you want to be, guys, I'm going to give you everything that you need to be successful. To get to where you want to be, you've got to learn these looks. You got to commit them to memory. You've got to be able to recognize them fast. Did you see how quickly I got to that chart and pinpointed that entry? Did you see how confident I was at where I was going to take profits? Guys, that's repetition. That is a byproduct of repetition. I've been doing this for 5 years. If you can't do it yet, give yourself a little grace. You're getting there. Guys, you've got to understand strong triggers, weak triggers, clear path, and termination conditions. You've got to understand entries, and the fastest way there is not taking trades, but rather go take some pictures. Crack a beer, spend 45 minutes every afternoon taking pictures and annotating. Why are they strong triggers? Why are they weak triggers? Why is it a termination condition? Where did that one go? And if you do this every day, good morning, Miss Cindy. If you go back and commit these looks to memory, guys, you're not going to trade without strength unless you choose to. And you're not going to accidentally trade into a termination condition. You will always understand that concept and whether or not you're doing it or not. So take the pictures, annotate the charts. That's the first step. I'm going to give you guys this one as well, the high probability trend trade checklist. And what this does is this associates the words with a picture. That's what gets it to click in your brain, guys. When a termination reverses the market, that's a strong bottom. Separation is strength, weakness, termination, potential to break, clear path. How do I define my area? All of this is put right here for you. So as you go take those pictures and start to fill that 101 section on your spreadsheet, guys, you've got a cheat sheet. There's that 101 section. Strength, weakness, strong, all that good stuff. The second page, is a checklist that you can put on your desktop. Guys, print this out. Put it on there. I spent years in the professional world training managers. Every manager that came to train under me, they used to send them in from all over the country. They got a checklist. This is exactly what you need to do, where you need to be, how you need to do it, and let me tell you the whys. And guys, I teach this class the same way. This is your checklist. You can find success if you follow the checklist. Never had anybody follow this checklist and do worse than 70%. But you have to understand the concepts. I'm going to suggest that every time you take a picture, you use this language in your annotations. Odds favorable, termination, areas inside of favorable large triggers. Paint that picture in your head, what it means to have the rules met, both verbally, vocally, however you want to say it, and visually. Print that out. Police yourself. You'll never have to ask me if it was the right trade if you write this on your chart. You'll know. And then I'm going to give you this one, guys. This is the KISS plan. It is unrealistic to expect you to write your own trading plan your first week, your first 2 weeks, your first month, guys. And your trading plan isn't going to resemble this at all in 6 months. This is the KISS plan, the Keep It Simple Sunshine plan. The KISS plan is a stepping stone in your learning journey. Guys, the high probability trend trade isn't your get-rich trade. The high probability trend trade is the one that's going to teach you to see things so that you can take the perfect trade, so that you can find your trade. It's designed to optimize your chances of success with the high probability trend trade. Guys, this is the best of the best of the best of the best of the best. This is the one that wins more than it loses. This is the one that teaches you to read the charts, that builds confidence, guys. And then through simulation, study, class feedback, and continuous practice, guys, you're going to figure out your plan. You're going to create your own plan. And your plan is going to be completely based on your ability reading the indicators. So you're laying the groundwork so that you can go next level, guys. Your simple plan for consistencies: don't fight the large chart. When the large chart says down, go down. When the large chart has momentum down, go with it. Don't fight it. Don't trade into those termination conditions on the large chart. Let the large chart lead the way. The easiest way to find success is to have momentum and a clear path, and then find your entry. Define your entry. What's it going to take to get me in? And guys, great entries create manageable trades. Great entries reduce risk. Great entries create profit potential. You have to be able to pinpoint where the market is most likely to continue. And then you're going to pucker. You're going to say, holy crap, I've got something to lose. I'm in the trade. That was easy. The patterns are so easy. Oh my gosh, I got the feedback. I could do this every day, all day. And now you've got something to lose. And guys, this is where people tend to fall apart as day traders, especially newer people. Management should be every bit as mechanical as entry for the new user. Management should be nothing more than a series of if-then. Guys, when you have a very solid management plan, it takes a lot of the emotion out of it. So this is designed in the KISS plan to do two things. The first thing is it's designed to remove the emotion. Everything is if-then. The second thing is it's designed to get you paid, because for whatever reason, people forget that the whole goal of day trading is to make money. The whole goal is to get in and get out of the market with more profits than losses. That's it. But we all have this idea that it takes home runs to find the end zone. And guys, that's not it. You like that? Two different sports in one. So your very mechanical management plan is entirely based on your ability to take the correct entry. Your pullback to an area inside of favorable large triggers. Guys, you started working on management for this trade when you had momentum and when you had a clear path and when you pinpointed this area. Your initial stop is 5 ticks below those trigger lines, 4 to 5 ticks below the trigger lines. And you are going to build so much trust in this methodology that you're going to say things like, they're going to have to come get me. I'm not going to run smaller stops. I don't care if they push lower. They're going to have to come get me where the market shouldn't go. And guys, when you start saying that, you know you trust your methodology. From this point, one or two things are going to happen. You're either going to get stopped out. It's a normal part of a positive equity curve. Anything that wins 70% of the time loses 30% of the time. Or you're going to get one of those reversal bars, that up bar that says, hey, guess what? We're going in the direction of the trend. We're going with all that momentum. We are cruising towards that clear path. And guys, this is your first stop movement. If I get a reversal bar, then my new stop is 2 ticks below it for a long trade, 2 ticks above. And there's nothing to do. I'm either going to get stopped out or I'm going to get paid, guys. And my first payday is $100 away from my great entry. That's it. 8 ticks on the S&P, 10 ticks on crude oil. And this $100 feels good. Oh my gosh. This $100 reduces stress. It dries sweaty palms. It gets rid of those butterflies in your gut. Guys, $100 is pretty freaking rad, and it feels awesome and creates confidence. And then with all that confidence, you're going to go break even. You're going to say, I just got paid and I have nothing to lose. And this is entirely because you have to remind yourself that the only reason you got into this trade in the first place was because you had momentum and a clear path on a large chart. Because the large crowd wants nothing to do with going down. They want everything to do with going up. And you're going to hold that second trade. You're either going to get stopped out, break even, or it's going to hit your second target. And your second target is only $200 from your entry, guys. And that's a $300 trade, no matter what happens next. It's a $300 trade. And I want you to see that trade that we took on the S&P. And I think it illustrates why getting paid is so important. That was your $300, that tiny little move. And if you said to yourself, it has to go lower, I have to get more out of this. Guys, you're stoked that you took 300. And then here's a great example. With odds favorable and a clear path, that one lost. Guys, I have both scenarios on one chart. This one was an easy $300. This one, you probably lost $150. So maybe you're up $150. Guys, it's the exact same rules, it's the exact same entry, it's the exact same conditions. The only difference is that here, it didn't work. Here, it worked beautifully. The first shot's usually the best shot. So you're developing trust. And notice that pullback, look at where it shows up on this chart. Hold on. Right at the top of the tail. So if I go back and I circle these tails, and they line up with an area inside of favorable large triggers, that's a great study tool. Did we get another one? This is probably one. So let's circle a tail with all that momentum. And let's go to the small chart and see what it looks like. Are there any questions about the high probability trend trade? Look at that. Directly to support, right inside of favorable large triggers, and look at how far that market went. New users made 300 on that one. Experienced users held it to the fib. Rock stars probably just kept going until they got something definitive to take them out. So same thing every morning. Every morning, guys. It's just rules for when it's okay to trade. It's 3 rules, 2 charts, trigger line and Fibonacci rules for when it's okay to trade. Simulate, practice, get feedback. Tell me what you saw. Simplify, keep it basic, keep it focused, guys. And that's what makes it easier. And I want you to see something else. That $300, if that's the best you do every day, is a $75,000 year. Add a break even to it and you're in 6 figures. Pretty cool, right? That's not a big goal each and every day. And you can do this other ways. You can add contracts as your account grows. You can use trade copiers. You can do whatever you want to get more out of it. You don't need more trades. You need the best trades, taken with confidence, managed the way they need to be managed. And you will find a way to make more money. Where's that KISS plan? You will craft a plan and management based on your ability reading the indicators. My thoughts on trade copiers are that I have heard so many horror stories in them that I've avoided them like the plague because I hear horror stories. And I don't know if that's universal. My second thought on trade copiers is that my anal retentive OCD, it has to be right before I ever release it to the world, brother, has a team of programmers building a copier. And I will use that copier. Horror stories, people getting put into phantom trades and stuff like that, and opening positions that they didn't mean to open. And there's a lot of stories out there. I'm waiting for Nexgen's version because I trust my brother. So I've given you guys everything that you need to be successful. Smart John, yeah. I've given you rules. We've broken them down individually, and I've taught you how to study them. I've given you the tools that you need to study them. You have a plan, a written plan, a plan that's been proven to win more than it loses, a plan that keeps it very focused and basic. You have everything you need. The only thing that I haven't given you is experience. And guys, that's the thing right there. The only thing that I haven't given you is the trust in this pattern. You have to develop that for yourself. You have to study it until you trust it. And I'm going to tell you, if you don't trust your rules, you're gonna fabricate. If you don't trust your rules, you're gonna jump in because of the fear of missing out. If you don't trust your rules, you're gonna move your stops too soon, get taken out, and watch it run. Guys, one of the things that new users, for whatever reason, refuse to do is develop trust. They skip the repetition phase. They skip the picture taking. They skip the practice. And worst of all, they skip the feedback. Guys, you have me 15 hours every week, and all you have to do is drop a picture in this room and say, Mark, check it out. Odds favorable momentum, clear path. There was a termination condition at the top. I took a pullback to the mid band inside of large triggers. I made money at divergence, and I took 200 at the second. And guys, Wayne not only took the trade that we talk about every morning, Wayne annotated his chart perfectly so that when he goes back to study it tomorrow, he never misses this move because he has the faith in it. And then I, because I'm kind of a jerk, am about to steal Wayne's picture, and I'm going to put it in here for you guys to study because, you know, it's mine now, Wayne. But guys, that's everything that we look for. And I'm not sure if Wayne's in here yet. But that's Wayne's Hall of Fame short. Go back and look at it and compare it to the perfect long. And let's see what Cav did here. I love the spreadsheet. Oh, that one's no longer available. Cab, you're killing me. E. Webster's perfect long. Man, guys, stop deleting your pictures. I'm going to have to go clean this one up. Nico's perfect long. There we go. Odds favorable. Everything's up. Pull back to support. Easy money. Guys, go through and look at these. And I want you to see something right here. Perfect trend trade long didn't work. Anything that wins 70 to 80% of the time, son of a gun. I really do need to go clean this up. Anything that wins 70 to 80% of the time, ladies and gentlemen, is going to lose 20 to 30% of the time. I want you to see this picture. This one is especially endearing to me. Odds favorable momentum, clear path. Perfect entry, reversal bar given, no stop movement. Took a big honkin' loser instead of an itty bitty loser. Your entry was 2 ticks above the mid band. Could have been a 2-tick loser, instead it's a 25-tick loser. So guys, make sure that you have a plan, because the one thing that you have to know is you have to know before you ever sit down live, no pressure to know it brand new, why you will enter a trade. You have to have rules to enter a trade. And then you have to know why you're going to exit, guys. So entry rules are based on patterns that have been proven to win more than they lose. That's it. It's just a pattern. And you have proven through study, simulation, class feedback, continuous practice, that if I take the high probability trend trade, I'm going to lose 3 of them every 10 trades that I take. I'm likely to win 7 of them every 10 trades that I take. I don't get to pick which ones win. I don't get to pick which ones lose, so I've got to trust that pattern enough to take it every time it sets up. And then I have to know why I'm going to exit, guys. And your exit condition should be identifying when your advantage is gone, if your targets aren't reached. So if I enter the highest probability trend trade, the first potential exit is when I get to the wrong side of the triggers where the market shouldn't go. My advantage is gone. I have to be okay taking that exit. Maybe it's 3 divergences in the same price range. Maybe it's divergence from a 1-to-1, guys. Initially, your exit plan is nothing more than the KISS plan. But you will find ways and you will learn how to manage differently. If I'm looking for a 50-50 trade, if I try to enter it like the high probability trend trade, I'm more likely to lose. If I try to manage it like a high probability trend trade, I'm more likely to give a lot back. So I have to be so good at this one that I don't confuse it with this one. This is why I believe simplicity is such an important thing. If I take a momentum trade and I try to manage it like a high probability trend trade by keeping my stop on the other side of the triggers rather than identifying when momentum is gone, it's going to change it. Sound is choppy again. Discord is. Let me do a quick little reboot. Let me do... YouTubers, sorry about that. All right, for you guys, everybody can you hear me now? If you're in here. Yeah, cool. All right, guys, it's break time. I think one of the worst things you can do, and this is just me projecting, I suppose. I think one of the worst things you can do is sit in front of your computer forever, because the longer it takes to find a trade, the more likely you are to fabricate one. So I try to take a break on the hour, guys. I like to take a break every hour, stretch my legs, scratch the dog, grab something to drink. I encourage you to do the same. So while people come piling back into the room, I'm going to take 5 minutes. When I come back, we'll start looking at charts and your chart reads. So go stretch your legs. Back in a minute. All right, guys. Jay, I was on break. Oh no, only 21 people came back. That stinks. I sure hope the rest of them come back. If not, guys, it's just us. That's okay. You're all my favorites, so we're good. Second half of class, second 2/3 of class, guys, is just chart reading. That's all it is. It's you guys showing me what you're doing. It's me making sure that you're reading charts correctly. Whoops, where's my crude oil? There we go. Guys, it is Wednesday, right? I'm not mistaken. There is no crude oil inventories today because of the holiday Monday. That's what it was. I was like, I don't remember seeing crude oil inventories. So that'll be tomorrow, crude oil traders. All right, so I'm going to go through, and here's how the second part works. Post a chart. Ask a question on it. This classroom is designed to be a discussion, guys. It was never intended to be a lecture. The first hour feels very lectury because I've got to get some stuff off my chest about momentum and clear path and entries. It's up to you to make the class great from here on out. You're going to make it great with your pictures. You're going to make it great with your questions. And I'm going to tell you, nothing's off limits, guys. I don't care if you're showing me a high probability trend trade, or if you're showing me a medium probability trade, if you're showing me a momentum trade, or if you're talking about this or that or whatever. Show me your pictures. Ask me your questions. If you're working on a plan, let's work on it together. Don't be the trade police. I can't stress that enough. Do not be the trade police. There are people here that are at different levels, and they've done the study, and they've created their own plans. So anytime you look at somebody's trades, whether they fit the rules or not, try to pull advantages out of it. Try to go, oh wow, that's that momentum, that's that clear path. This is what we're talking about. And what it's going to do is it's going to help you get to where you want to be. So Joel came in last night, guys, and I'm going to click on every one of his pictures, and I'm totally cool with you guys doing this. Where does his start? I think it was this one. Guys, if you do market replay and you take 20 pictures, bring 20 pictures to the room. If you take trades yesterday that you didn't get to post today, bring them to the room. It's okay. So Joel's talking about a momentum trade here, and he's got a checklist for it. I love it. And what Joel is saying, and this is awesome, is look, Mark, I have momentum, I have momentum, I have momentum, and on my small chart, my entry chart, I let it break and then pull right back to support, and that's my entry. And it was easy because I had momentum and a clear path. And guys, that's going to be the first time we see momentum and a clear path produce a winner. That's what I think you should pay attention to. Odds favorable momentum and a clear path, open like scissors, Joel. Pull back to resistance inside of favorable large triggers. Momentum and a clear path. Guys, we're 2 for 2. Odds favorable momentum and a clear path. Oh, for the love of fuzzy. Here we go again. Pull back to support inside of favorable large triggers. And another winner. Momentum and path. Are you guys starting to see a pattern here? Momentum and path? Let's see if it keeps up. Momentum, momentum, momentum. Pull back to support right at the triggers. And it goes to the next fib. I don't know what that means, Andy. I've been saying that for 30 years, 40 years. Once again, momentum. This one didn't have the perfect path. But once it got above trouble, momentum and path takes it right to the next level. So we're 2.5 out of 3. Open scissors, momentum, clear path, pull back to the midband, right there. And down it goes. Joel, killing it. Uh-oh. Momentum. No clear path because it's only the potential to break. This is the one I want you guys to see. Joel says, check it out, Mark. My smalls are above the area, but my large are below. I have odds favorable momentum. Mark, I know this to be a look that could break an area, has the potential to break the area. So I'm going to take a low risk entry at the lowest point of resistance inside a trigger so that I've got minimal risk, and I'm going to ride that wave of giddy up. And sure enough, once again, momentum. Momentum again. Open like scissors. Potential to break. Takes the entry. It doesn't go outside of the triggers. And another easy winner. Guys, Joel just put on a clinic for you. Momentum and clear path. I can't stress it enough. Momentum and clear path. Did I mention momentum and clear path? He sure says momentum and a clear path a lot. So much so that I do stupid pictures. I wonder if momentum and a clear path are really enough for a solid plan. What do you guys think? I feel pretty good about it. All right, Next picture, Ron C, early morning heartburn. Here we go. Everything says up. The momentum is up. The path is up. And Ron says, you know what? When I get two divergences in the same price range and I get that reversal bar, it typically goes to the reversal bar on the large chart. Guys, this fights momentum and this fights the trend. This fights everything that you're told as a brand new user not to do. Does that make sense, guys? Everything that I just beg of you to not do as a new user, Ron just did and found success. And Ron, I had this planned out for the segue here. Guys, the key to everything is having a foundation. That's all we're doing is we're building a foundation. We're creating this solid base that we can grow from. And you're going to grow a little bit each day, a little bit each week. So for you new users, I blanket you with very conservative rules. Recognition of advantages, guys. And I give you a solid plan that optimizes the chances of success as you learn to read your indicators. I'm like your grandmother and a dog's barking. I'm going to pull you in and try to keep you safe, guys. That's what I do for my new users. You know whether or not you're new. If you're not finding success every day with a solid plan, you're new. I don't care how long you've been with me. So for the brand new user, for the person that's not consistent yet, guys, no momentum is bad. Areas beyond triggers is bad. Termination conditions are bad. And holy smokes, fighting momentum from the large chart is horrible, catastrophic. But then you get some reps in. Then you start to recognize patterns. Then you start to formulate a plan outside of the highest probability trend trade. And just like anything, the more time you spend with it, the more you see. That's what opens doors. So initially, it's the process that yields the results, guys. Focus on the very basic process that gives you the highest chance of success. And question everything. Question everything. But when you see Ron jackassing around, fighting trend and momentum, don't think, oh my gosh, Ron is doing something wrong. Say, holy crap, I can't wait until I can read charts well enough to do what Ron does. Good stuff. Thanks for that, Ron. That's the perfect segue into that lesson. You're going to see stuff that doesn't make sense. You're going to see stuff. Guys, he gives me heartburn every day. I've got a bald spot with his name on it. Let me figure out where we're at. I lost my spot. And guys, here's one of the biggest problems. And let me say this. You guys are going to see Ron get paid and try to do it. And you don't have any freaking idea why he did what he did. You just know that he went short. So you're going to go short because you're going to make money like Ron. And guys, it's going to rip you a new one. This is my favorite. When everything says down, when the path is clear, momentum and clear path, Ron says, I could just jump in and jump out and make $100 because base hits pay bills. Ladies and gentlemen, this is the chili dog trade. I love the chili dog trade. All right, Joel. Momentum trade. Open like scissors. Break of support. Okay, it took me a second, and that fib wasn't there yet. And Joel says, once again, with this level of momentum, with everything saying up, with the best of the best look on all of my charts, I'm just going to hop in and keep going until I lose momentum. Great job, Joel. Another great trade. I put a little thing in the room earlier. And guys, I want you to celebrate. I try to celebrate every day. I try to give you props as often as I can. Make sure that you're doing it yourself. Make sure that you're talking to yourself like you're a 4-year-old learning something new, guys. And I was doing a little research on self-talk. And the one that struck out, and I posted in the room earlier, is our self-talk can be cheerful and supportive or negative and self-defeating, guys. And it's up to you which it's going to be. And self-talk can be beneficial when it's positive, and it can calm fears, and it can bolster confidence. Guys, when you see stuff like this, remind yourself that you're good at this. Remind yourself that you understand this, and be okay when you take a step backwards. Be okay when you make a mistake. Allow yourself to be human. All right, Andy. Andy says, and Andy's full of beans sometimes. Andy says, with odds favorable momentum from a strong top and a clear path, I could take a pullback to an area inside of triggers and make some money. Time to take a break and keep the wins. Andy, this is beautiful. It's the easy one, isn't it? And Andy, can I ask you, did you talk out loud getting into this trade? Did you say this stuff out loud so that you would believe that this is your trade? It didn't almost come get you. It went, oh man, it went 3 ticks above. Speak it. Believe it. Guys, your brain believes everything that you tell it. Your brain does not know what a yahoo you are. And if you say, I have every advantage, I have to take this trade, it believes you, whether you're lying or not. And the same is true. If you say, I'm missing advantages, I shouldn't be in this trade, it believes you. I love the self-talk. And Pete says, with momentum, but void of a clear path. I love that. Clear path to target after fib. That's awesome. I don't have a clear path. I'm going to take the trade, but once I get to the other side of the fib, I've got nothing but space. Let me take a shot going into it from the area inside of triggers. I love this trade. Almost exited, but it was a trend trade and not a momentum trade. So Pete knew what kind of trade he was in, and he knew what the expectation was for that trade. So he didn't exit with a loss of momentum. He held his position all the way down. And ladies and gentlemen, that is 25 contracts, 40 ticks. That's a $10,000 trade in 9 minutes. Pete, thank you for sharing that. Guys like Pete and Ron are going to show you what you can pull off once you get comfortable with the software, once you understand what it is to get you in. And Wayne, we saw yours, the perfect trend trade. Here's another gentleman that can show you what's possible once you get a plan. Steve, let's see what you did. Large and small triggers are turning down from a termination condition. Strong separated from the large, room to the fibs. Everything said down, he let the trouble clear, gets in. With that clear path, he added on, got out at the fib. Perfect. And then over here, so that's your flex trade, right, Steve? I just want to make sure, because I know you're working on a new one, because I got something for you here. That was quick profits. I like it. But when you're coming from a bad bottom and the mid-band's your target, you just didn't give yourself any room. I love the way you took it. I love where you took it. And I love that you didn't hold forever, because that's your problem spot. Great trade. Room to target's is a big one on those momentum trades, because every line can create a bounce. But I think you executed beautifully. I just wanted to point that out. I'm sure you saw it. Both large and small triggers never turn up. This is not the 2004 pullback trade. Only looked at the 13.2 small triggers. I'm trying to see what you did. Where did you enter? So that was probably the exit for another trade. There's a long trade. Oh, dude. Everything said down and you went long. Every indicator said down and you went long. And you got exactly what we would expect. And then it didn't break anything from a bad bottom, every trigger below, and you traded directly into the resistance, and it created a bounce, as it does. And you held it, which is scary. And then there's your trade it's easy. When the triggers roll, when the smalls are above, when everything says up. I think you got a little bored right there. Possibly. Allegedly. And you knew that it was bad and you policed yourself, and I think that's great. No, learning experience, right, Steve? Everybody in their life has to mouth off to somebody bigger than them and get punched in the jaw so they don't do it again. That was your punch in the jaw on this rolling triggers. Let the large chart tell you that it's time, and then it becomes pretty easy. Still great trading. Always great trading. And as you're learning something new, it's okay to take those trades on sim. Pete, directly into a termination, odds favorable. Since there was no divergence, you said, let's see if we can get the retest. Siren song of the small chart. Amen. Pulls you right to the rocks, doesn't it, Steve? I'm guilty of it, man. I'm guilty of it. I will never get mad at you guys for making mistakes. I've made all of them. Pete, the only thing, not a 50-50, not at all, directly into a termination condition, 100%. Pete, I'm not going to lie. I hate this trade and I love that you got lucky. If I'm coming from a termination condition, rock star, love it, willing to take it. If I'm coming from the middle of nowhere, to have a mid-band and resistance, you got lucky on the retest because of the momentum, I think. You dodged a bullet on that one, Pete. That's a low probability scenario. No matter how much money you have. Nice job, dude. All right, Miss Jen. What did you do, Jen? Odds favorable. Everything says up directly into the termination, and you take the trade. You may have other reasons, though, Jen. Out at the first sign of trouble, and you get out with a loss of momentum. Nicely done. Looking for tea times. I love it, Pete. I got mine tomorrow. I'm almost done here in Dallas, so I'm going to play another round or two. Man, I've been doing work at the range and fixing my aim. I'm ready for tomorrow. And I hit driver. You'd love it. I was hitting driver 250 at the range, straight, carrying 200. I may have fixed it. Jen, I love it. And I know that you had more going on, but look at the momentum, right? And Pete pointed it out. No divergence is great to see if it retests. Absolutely beautiful. You guys are so smart. And then Ron, support holds, triggers roll, in and out with the momentum. Good heartbeat base hit. I like it. Pete, I will probably never get to 300, man. My lower spine looks like a 4-year-old with an erector set put it together. So I don't have the twist. I can't get that. I can't get that club speed. I peak out at about 130. Erector set, Jen. There's Jen. He does every now and then, big dog. So what was it? Was it like 120 forward and 175 to the right? I don't think that math really adds up. I've been with John. I watched John, oh my gosh, drive in for eagle on a par 4. It was like a 280 par 4, and he left himself like a 4-foot putt for eagle. Drove it. It was amazing. When he gets a hold of his driver, he's a bad mofo. When it's not working, he's a bad mofo. I can't wait till he gets his back fixed. I'll be in Sarasota more often playing golf with you guys. Great job, Ron. Momentum and clear path. And where are we now in crude oil, guys? I had a termination. My small triggers are rolling. Some of you are saying, you know what? If it pulls back to those small triggers, somewhere around these large triggers, I'll take a short because that's the exact same trade that Nexgen started teaching in 2004. Fibs hold, small triggers roll, sell a pullback. Guys, it's been the same recipe for 21 years. Pretty cool. What else do we have? Look at that. Potential to break. Divergence killed it. Divergence on a 50-50, ladies and gentlemen. One of the biggest killers of the 50-50 trade. I love this one. Momentum and clear path. Can you guys give me a Y if you see that the mid band was on the wrong side of the triggers? That's pretty detrimental. Makes it harder to take the right trade. And now we're watching it. Guys, we made it through all the pictures. We made it through all your pictures. Good job. Now I just have to get you to start asking some questions. What do we want to talk about? We want to talk about, I don't know, we could talk about me hitting driver. We could talk about Ron finding stuff on the beach. We could talk about Pete shopping for a new Porsche. What do we want to talk about? We've done momentum, right? Is everybody good with momentum? Separation? There it is right there. We talked about termination conditions. I know not to go long into that. There's my pullback to the small triggers on my large chart after a termination. Should we see if it works just for grins? Pull back to the small triggers. Probably got that one a little bit early. I don't really have the timing on that one, but in 2004, 2005, if you hit fibs with divergence and get in after small triggers roll, I skipped the divergence, guys. I broke my rules. Dang it. That's why you shouldn't take a trade unless you know the rules. Because you run the risk of doing that. I wonder if I did that on purpose. I wonder if I took a trade that I knew broke the rules to not have a statistical advantage to prove a point. That you have to know why you'll enter a trade. You have to know why you'll go long or short. You have to know what the conditions are. And guys, half-truths typically don't work out. Kind of cool, right? Man, he lost money in front of God and everybody in this classroom. That's what simulator's for, guys. Simulator is there so that you can make these mistakes, so that you can say later in life, you know what? I broke a rule. I have to come back and study it. I have to come back and ask myself, did I really take the correct trade? Do you like making an entry at the fib for divergence? I love that. I don't have a preference, Nanda. I don't care where my entry is as long as it follows my rules. And man, it's been a hard lesson over the last couple of years. It's taken a lot of study and an enormous amount of feedback from John Novak to make me feel comfortable taking my trade without hesitation, without fear, without anxiety, and simply entering when the rules are met. And Nanda, you're building your own trading plan right now through your ability to read the charts. I love when you guys do that. What are we talking about? What do you guys want to do? I tell you what, I'm going to mute. I'm going to let you guys tell me what the next subject is. So I'm going mute. M says, is that a strong top? And then M said, wait a minute. The large triggers didn't roll. That can't be a strong top. Not until the large pinch and roll red. Perfect, M. Taking the language that identifies the advantage. What a concept. I love that. It's perfect. What makes a strong top or bottom? When a termination condition reverses the market, it's a strong top. If the market reverses from the middle of nowhere, it's not a strong bottom. It's a weak bottom. And when I have a weak bottom, they love to go find that next fib. When support breaks, it behaves as resistance. Holy smokes. When a termination reverses the market, it's a strong top. Wow, look at all these lessons without having to take a trade. Termination, bounce, bounce. Now it's a strong top. Down it goes. Termination, rolls, strong bottom. Look at rule number 2, guys. Boom, bang, bing, zing, pow, wow, dope, ooh, crap. Thanks, rule 2. And those large triggers never rolled. Absolutely, Nanda, let's do it. So Nanda said, let's go through the entry sequence from the spreadsheet. So under the client trades up top, there's both a long and a short. So let's do both of them because you know what? We have time. So everything starts. Rules met on the large chart, guys. Rules met on the large chart. Momentum and path, momentum and path, momentum and path. When the rules are met, step 1 is wait for the reversal bar on the small chart, signal the beginning of the pullback. This says, hey, the fight is on. Let's pinpoint where the market is most likely to continue with that momentum and clear path. Step 2 says identify your favorable large triggers from the top of the larger synthetic to the bottom of the large synthetic. This is the range. This is where the market is most likely to return. This is where the price bars are most likely to return. Remember that it's not an entry because look, it hit the triggers on the reversal bar. Once you find your triggers, you have to look for bounce points, areas, fibs, mid-bands, yellow 1-to-1s, guys. And your window is from the closest resistance to the reversal bar to the furthest resistance from the reversal bar. Lowest point, highest point. This is your window of opportunity. This is the point where the market is most likely to continue with momentum and a clear path. This is where the small crowd is most likely to fail. So once you identify that, all you have to do is put a limit order just below it. And if they come and hit your limit order, guys, you're in a short trade with odds favorable momentum. You're in a short trade with no termination conditions. You're in a short trade from an area inside of favorable large triggers. And your initial stop will go up there where the market shouldn't. So there's your short trade. I love futures. We make it both directions, right? There's one of those strong bottoms. Termination reverses the market. That makes me feel great about anything I'm about to do. Odds favorable momentum, pretty easy to recognize. Price has not reached the fib. My path is clear. It's time to go look for an entry, guys. It's time to wait for that reversal bar. And the reversal bar signals the beginning of the pullback. The reversal bar says, hey, let's look for triggers, large and synthetic. Are they one on top of the other? The wider they are, the bigger the range. This represents where the market is most likely to return. Once I have that, I need to find my bouncy points, areas inside, fibs, mid-bands, yellow 1-to-1s. And the window extends from the highest to the lowest. Guys, I've done everything that I can do. All that needs to be done is activate a limit order, a tick or two above, and wait and see if they get me. And guys, those are the entries, both up and down. So that's for you. All those pictures are right there. You're welcome, Nanda. Thanks for asking. And then, M, we'll talk about yours. Let me go through the Wayne show here. Wayne's got 4, 5, 6, 7, 8 pictures he wants to talk about, which means that I am happy as a clam. I am clam happy to talk about Wayne's 8 pictures. So let's see what we have. Pivot. That is definitely a pivot. Odds favorable momentum. I agree. The area has the potential to break. Actually, you're trading directly into fibs. You're trading directly into termination conditions. But Wayne, what you did is you took those strong triggers, strong triggers, strong triggers. You let it break and pull back and then head down. What's the nope? No clear path? Or are you telling me I'm wrong? Because I'm cool with either. Do you see that fib? Do you see your triggers? It's a termination, Wayne. Don't care how you try to sell it. It's a termination. 100%. Does that make sense? And guys, please question me every time because it means that we're not on the same page. So I want you to see the whole read on this one. So it's a bad top, which means that these areas have more likelihood to hold. It is every trigger above. The large triggers are still up. The only thing you have going for you from the large chart is you are in the momentum phase on the small triggers. On your small chart, even your range chart, you're in an HVA. You've had 2 up bars. Fast triggers are rolling against you. That's not the best look. And you are 1 tick below a fib. And it worked. Why did it work? Well, because the sellers wanted to go down. Because you had the momentum phase. Because you had momentum. Because you had momentum. And that's all it was. And Wayne, it wouldn't surprise me one bit if that fib held and the market skyrocketed up with those large triggers looking at that. Looking like that. And let me show you what I mean. Large triggers never rolled. And you'll get that a lot. And there was a push down with momentum. I love the picture, man. And I love that you fought me on that one. But that is textbook termination condition. You took advantage of momentum and you didn't get greedy. And I think that's the key. See, you say that all you want. Which chart leads the way, Wayne? Are you looking for your large chart for a reason to trade? Because if you're not, why the hell do you have it? Okay, so let's go back to this picture. I love these conversations, guys. I really do. Wayne, I'm going to do this right at the fib. Does that look like a fib that's going to break? And where was your entry? This bar. That's your bar. Does that look like a fib that's on its way to breaking? Dude, one is up. The small aren't even away from it yet. And every trigger is above 1, 2, 3 areas of support. Do you see what I'm saying? So when you say 50-50, what you're doing, Wayne, is you're identifying this look right here. And do you notice? Okay, there's your midband. You're identifying this look right here after the trade. You're not identifying what was going on into the trade. And that's okay. That's what I'm here for. But then again, let's celebrate, right? Dude, momentum, momentum, momentum. And you're on the good side of those triggers, brother. And as long as you are, it's going down until it closes on the wrong side. So your momentum phase, your momentum phase, your momentum phase, I don't hate this trade at all. I wouldn't say you got lucky with momentum. I think you just let momentum do what momentum does. But what I would want to see from you is that you understand that it's a little problematic. And your stop, I hope, was right behind that one, maybe at 04 when you get in that bar form. So you're like, dude, minimal risk, right? If momentum carries it, kick ass. If it doesn't, small loss because I know I have trouble. Does that make sense? Perfect. And I think that's why when I see 50-50 and stuff like that, and it's not odds favorable momentum because the large triggers are up and green. It is literally nothing more than small trigger momentum, which is cool. It's powerful. Obviously. It's a lower probability trade. Let me see if we can find a similar look. The large are still up and the smalls break below, but support can hold when it looks like that. I'm trying to find another one that looks like it. That's kind of it too. Right there. Do you see the bounce that comes off of it? I think that's the one that I would want you to see. Because it's really a similar look right there. Do you see that bounce that comes right off of that fib? That's more likely with this trigger look than for it to just smash through and go to the next area. That's the more likely scenario. The more, like, that's the pattern that's probably going to happen more. I love it when you guys show pictures like this because it really does open the door for some amazing lessons. And sometimes we don't always think about what we're getting into. 9:42. That must be the day before. Hold on. So that was your entry. Do you see how, and I'm not trying to beat a dead horse here. I like the trade. You used momentum beautifully. Momentum didn't take the trend trade, so you took it on the way down. Made money, made money. Sold a little late off market flow chart. Should have used small chart, trend chart entry. Wayne, do you see how you got your market flow signal up here even? You're confusing the white bar from a termination condition trade with a trend trade. You mixed up your rules. Take care, Ron. Have a good one, man. You don't have to wait for a white confirmation bar when you have odds favorable momentum, clear path, and pull back to areas. And that's one of the things that happens when you start having a couple different trades is you run the risk of kind of combining the rules. And you'll take some that you shouldn't, and you'll miss some that again, there's your momentum trade. Same look, directly into fibs. One tick below isn't fibs breaking, but you have momentum, 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 and it works out again for you. That was the exit. And then when momentum fails, it turns into a trend trade. And you don't take the trend trade. You take the jump in down at the bottom because you're waiting for the white bar instead of the areas inside the triggers. Does that make sense? This white bar trade, dude, it comes from terminations. You're missing a lot of money on trend trades because you're waiting for the white bar trade. Do you see the momentum? And then that pink arrow, if you want some sort of confirmation, that's your confirmation. Here, you're so deep into the move. If anything goes wrong, you're at the bottom of the move. Cool. Good stuff, man. Good stuff. And that's a good example. So instead of going from 02 or even with a reversal bar from 01 to 95, 96, it tightened up a little bit on you. Great trade though. You're making money, dude. That's the goal. Odds favorable momentum, weak triggers. How can you have both? Clear path, but mid fib could hold. That doesn't even make sense. This is the fattest skinny guy that I've ever seen, and he's running so fast it's slow, right? So you've got momentum down, but you're directly into a termination, off of a termination, straight from a termination, and back to the triggers. I like your patience of not doing this. And then once everything agreed, you caught it on the way up. I'm not sure what got you in here. Bought pullbacks and small market flow triggers had rolled momentum down. So are they not up here? Was that not a white bar off of support? Was that not a white bar off of support? You had two white bar trades to the upside. You had a white bar trade to the downside. This is just one of those, man, you're rattling around. Who knows what's going to happen? Yeah, but momentum and determinations doesn't mean anything, obviously, because you had it down and it hit. And look at the reaction. Pow, 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 pow. And you going short on the way up means that you're not respecting the reaction. You're not using areas. I get it. I don't think this fits the rules that you typically show me. I think there's more going on in your head than you're putting on the chart, and that's okay. But you had termination, 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 and you're just saying, well, it's down, so I'm going to go. Okay. Then good job. Good job. That one doesn't. You had the exact same scenario. Okay. So there's a great example. Once you're reading your charts, you can accept the risk, right? So Wayne, you might have said that's not perfect, but it's $80 for the potential to make 200. I'm cool with that. And that's okay. You are so excited to go counter trend. Everything says up, small's above the large. Wayne, please take this with all the respect in the world. Your $1,200 today is awesome. I think that's amazing, and I wish you nothing but success. But success tends to come from doing the same thing over and over, and you're just getting to a point to where you're making decisions that make sense to you, which I'm totally cool with. But look at your large chart. You have strong triggers, everything up, support 100%. Nothing even suggests on the large chart that the market is going down. And you said, because I got a white bar with the fast triggers up directly from a termination, I should go short. And you went short directly into fibs with divergences, with all the triggers up, with everything going on, right? Dude, it was right there, but you had already hit it. So not a clear path. I'm just going to go back. Not a clear path. Not a clear path. Not a clear path. Not a clear path. 50-50 easy win. Got in late. And that's cool, dude. It's your trading plan, right? I don't tell people how to trade. But you've shown me every trade directly into a fib. A lot of them fighting the overall look. I wish you luck long term. Everything says up here, and you go up with it, and it's effortless. And that's above trouble. That's above trouble. One tick is not above trouble. That's getting above trouble. Odds favorable, odds favorable, odds favorable. All freaking day, Wayne. That's the easy one, man. That's the one that makes money. Great job. This is the one that you could do every day and be cool with it, right? The other ones, you're taking some liberties there. And that's all right. I'm definitely not knocking your stuff because you're doing great, right? You're making money and that's the goal. And everybody makes their money their way. But as long as you post in the room, I'm obligated to say that you keep trading into fibs, and you might be getting lucky. All right, Nanda. Enter their why. Enter their why. Why not there? Why not there? Why not here? And Nanda, again, you had momentum, potential to break. You took the pullback and you got out of trouble, right? Repeatable. 50-50. Great entry, good stop, out at trouble. I love it. I just want to make sure you understand why you're doing what you're doing. This one had the potential to break, and you took a trade based on that potential. I like the way you did it. Nice job. And you let momentum lead the way. Telling you, guys, momentum. It covers some of the discrepancies that we have. Momentum. Everything is above support. No areas inside of favorable large triggers. How do I know where it's going to stop? Guys, if you took a confirmation bar at the area. In M, I think this was your question. So now that we're through there, M, let's go to your question. When triggers on the small chart are split, but the large chart has momentum and a clear path, what does an entry look like? Well, let's go see if we can find one. It looks like this. M, for the sake of argument, can we pretend that this was a clear path? Is that cool? Here, watch this. Let me, because there's always somebody, Mark, that's not a clear path. You can't take that trade, Mark. It's not a clear path. So let's make it a clear path real quick. Awesome. Thank you. Suspension of disbelief for the sake of the lesson. So there we go. Odds favorable, clear path. Beautiful, beautiful look. So let's go through it bar by bar. What do you say? Let's take the cheater circle off. That's the look on my chart. All right. And the market's going up, M. Bum, 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 bum. And I wait for the reversal bar, and there it is. In M, this is where you say, holy crap, my triggers are split. I've got an area here, I've got an area here, I've got an area here. So let's go to the first lesson. Price may return to the large triggers. But price may return to the synthetic triggers. Are you comfortable with that lesson, everybody? So check this out. That giant freaking box is where price may return. And where does my stop have to go? 08. My stop goes here. Right? Where the market should not. And guys, I'm gonna use that language that I use over and over. We'll make it orange red because I'm lazy. We'll make it solid and we'll make our stop right there. This is where price may return. 4 to 5 ticks below those synthetics. Is anybody comfortable with $300 of risk on a trend trade? Some people are in the right trade. So M, we're going to go to the second one. And that's per contract. So on a 2-lot, that's $600 of risk. So M, I might get a bounce from the mid-band. I might get a bounce from the 1-to-1s. I might get a bounce from the fibs. So if I get in at the highest point, hoping it doesn't go lower, my risk is still $200 plus per contract. Cool? So M, this is where you're going to say, and everybody in this room, I want you to say, my large chart is freaking amazing. My large chart is sexy as all get out. I can't wait to take a trade because the large chart has odds favorable momentum and a clear path. And then I want you to follow that with, my small chart is an absolute cluster foxtrot Charlie. That is way too much risk and a lot of indecision. So M, when I have this look, here's the cool thing. You're in control of your entries. You're in control of everything that you do, right? I teach you how to read charts, but you're the one that's got to do what you're doing. And Kurt just nailed it. M, can we wait for an up bar? Can we wait for a reversal bar going in the direction of momentum and a clear path? And that way we have some place to put our stop. So let's see what happens. Comes down, comes down, comes down, comes down. There's my mid band. I hope it holds. It might hold, it may not hold. I still have these areas down here. That's a lot of risk. So from 25 to 03 is $220 per contract. That's a lot. And what if I just arbitrarily put my stop right here and it goes down here? Well, then I just get stopped out, look like a silly person. Everybody laughs at me. There's a lot of tears that I don't share with the classroom. So next bar, it's still going. Still going, man. Oh, geez. Whoa. Check it out, Em. The small crowd just lost. The large crowd just won. It's going in the direction of the trade. And now my stop is at 17. And I've got 12 ticks, $120 risk. And I still have the best of the best look on the large chart, right? Does it mean that they can't change direction and come all the way down here? Of course it doesn't. But my risk is established because they're going the direction. So I'm in at 29. There's $100. That's a $300 trade, Em. And all you did is wait for it to confirm the movement because you had room to your targets. Confirmation will cost you $60 or $70 per contract. But what it does is it keeps you from hoping it doesn't go lower. And if it's one of the ones that are going to lose, it keeps you from losing $300 or $400, $500. Great question. Does that make sense, everybody? Oh, and you know what I didn't give you guys? I'm sorry. Every printout that I gave you guys this morning, or that I showed you, my PowerPoints, everything, there it is in a zip file. And M, that exact lesson, 100%, that exact lesson is in the PowerPoint. We didn't cover it today because I wanted to keep it a little more focused. But if you go to that PowerPoint that I put in the room, that's the easiest look. And there's the exact same scenario and the way your brain is going to be able to think to take those trades. So I love that question because M, they're not going to be perfect every time. And let's use this lesson. Large chart says up, right? Same thing. Large chart says up. Large chart has momentum. Everything is up, right? And I'm like, oh, I need to take a trade. I need to take a trade. Everything says go. And I get my reversal bar. And Em, I want you to see how understanding the concepts pay dividends. Here's the top of my triggers to the bottom of my triggers where price is most likely to return. How many areas do I have inside of this trigger? 0, right? But isn't this my best look on the large chart? Isn't that the greatest look ever? Why on earth wouldn't I be looking for an entry? Well, my small chart says, Em, guess what? I might go from a fib, but I might go from a mid band, and the honest answer is I might go from somewhere way down here, maybe a large chart mid band or fib. Who knows? What you have to say to yourself is I don't have any freaking idea. because I'm on the wrong side of the triggers. Make sense so far? So with this look, what do you suppose we could wait for? Kurt, we're playing Moneyball. I just snapped and pointed at you. With this look, confirmation bar. So let's see. Down it comes. There's a confirmation bar just above support. If you take it, there's your stop. Guess what? You got stopped out. Whoops. You just got stopped out below the bar. Man, stop that. Sorry, I'm a little drunk. Took you out. So M, tell me, with that look on the large chart, do you trust it enough to take this bar? This is what you have to ask yourself. I told you guys that it doesn't guarantee a winner. And I want you to see something here, guys, and this is kind of the lesson that I wanted to give. I didn't realize that it was coming. When I'm waiting for a confirmation bar, I want you to use this language. Confirmation bar at the area. I want price to get to my area, and then I want it to go up. One of these did, one of these did not. That's a hard one to say, oh man, there it goes, let me take it, right? Because I don't know where it's going to go from. You have to be willing to accept that loss. And then you have to say to yourself, do I still have the advantages for a re-entry? And if you do, take the trade, right? And sure enough, whoops. Sure enough, the large chart won. And you're good. Let's see if we can find a lesson here off that weak triggers. I love the lessons. Big dog, where have you been? That's okay, I got you. Let's do it this way. What direction are these bars going, big dog? They're going down, right? What direction is your large chart telling you the odds are favorable the market will go? Up. So what direction do you want to go? You want to go up. So a confirmation, big dog, is that bar that says, hey, guess what, brother? We're going up with it. And once this bar prints, there's your confirmation. And once you get confirmation, you can put your stop 2 ticks below it. This one's trading into areas. And I want you to see something. I don't have momentum. I don't have areas inside of favorable large triggers. I've given up 2/3 of my advantages. And this is what you guys are going to do. Well, everything says up, so I'm going to go up and you take this trade. I should say me. And I take this trade and I put my risk on. And it starts to come against me. And I say, I'm on the wrong side of everything. Everything's turned against me. Life sucks, but they owe me one. So I take this trade after taking a loser. And that one stops me out. And then I say, this is my trade. And I want you to see how the large chart changed. You didn't have momentum anymore. The smalls were against you. So confirmation bars, and this is the lesson that I wanted you guys to get. If everything is perfect, confirmation bar is amazing. Guys, if your rules aren't met, a confirmation is nothing than that small chart siren song. It's the small chart going, look, we're totally going up. You can trust me. I'm 1 bar on a tiny little time frame. How could the large chart win? Seriously, put your money in the market. What could go wrong with everything against you now? All the cool kids are doing it. Why won't you do it with us? And guys, these are the ones that drain accounts, and that's that revenge trading. Taking the trade that fails and failing to see that your large chart no longer supports it. Good lessons there. Great question. I'm telling you guys, this is my favorite thing about the classroom is when you guys ask the questions that create new lessons. So thank you. Thank you, thank you, thank you. All right, I'm going to put my indicators back on. I'm going to go take 5 minutes. I say 5 minutes every time. Guys, I'm going to take 2.5 minutes probably. Feel free to make a joke about that. When I come back, it's all you guys. It is all you 100%. Let me know what we're talking about. I'll see you in just a couple minutes. All right, guys, home stretch. Here we go. Emily, great question. Are we looking at synthetic or native for odds favorable momentum on the small chart? It's always the native. So the large triggers on the small chart, it's always that relationship, um, and that's what defines it. And then on the large chart, it's the other ones. It's the large, it's the native, and the small there. Great question. And you'll get times where, let's see if we can find it right here. The smalls are above the large, but they're inside the synthetic, and I think that's maybe where the question originated. If you look at, here's the top of my native, and the smalls are outside. Good stuff. 4 minutes, 56 seconds, Rob. That's how long it took. I like it. I like it. And guys, I want to say, because sometimes I feel like I beat you guys up, and I don't mean to. Because this is a learning room, and Wayne, this is just me. I had guilt telling you that you're trading in determination conditions. Because it's a learning room, guys, I'm obligated to talk about anything that breaks those core 3 rules. And guys, every time I say it, it doesn't mean that it's the wrong trade or the wrong thing to do. But I'm a huge fan of this concept right here. And this is why I do it. These are the advantages that I teach every day. Why do I teach these advantages? That's cool, Wayne. I know, but I don't ever want to be a jerk. I don't ever want to come off as someone. You're like, dude, I'm making money and he keeps telling me I'm trading in determination conditions. Well, you are. That's okay. Why do I do that? So check this out. If you look at your chart and you say, that's a termination condition, I don't have a clear path, doesn't it make sense that your brain should automatically, you lose one, the senses gain, right? You automatically start looking for that momentum. And Wayne, that's exactly what you do, which is why you still find success. And you make sure that your entry area is lower risk because you know you're working without this advantage. And that's why I talk about it in the room too, because we see a lot of very successful trades that are based off of really awesome chart reads. But when you trade into a termination, your brain starts demanding those other advantages. And that's why I bring it up, and that's why we talk about all of them. Does that make sense? And then eventually your brain says, well, I don't have momentum or a clear path. Why the hell am I trusting an entry area to get me to where I want to be? Why on earth would I give up 66% of my advantages and just have this entry area? And these are all interchangeable. Momentum's a core, and sometimes momentum's enough. But if you don't have a clear path or a way to get in, it can create challenges. So when we're going through the room and I'm talking about these things, right? If you go short right here, I have to say, man, everything still says up. The only thing that says down is this one red trigger. And you'll be like, okay, yeah, that's cool, but I made money. And I'll be like, yeah, but is that your best look? Is that the money maker every day? And you'll say, it is for me. And I'll be like, cool, teach me your trade. I used to hate Ron's chili dog trade because he just jumped in. He didn't wait for a pullback. Just angered me, gave me heartburn. Why is he doing that? And then I realized that he put a lot of time and effort into it. So it worked out. And the more time you guys spend with me, the more I get to learn what you do. And it doesn't faze me. Your stops, your targets, your trading plan, it has absolutely no bearing on my life other than I want to read your charts and help you and make sure that you understand. So know that if you post in the room and you're not following high probability trend trade, then your charts are up for review. Guys, here's a great lesson. Check this out. Fibs are areas. Fibs are areas. And we're going to turn this into a couple lessons. Three divergences shows change that you can't see on the large chart. Fibs are areas. So fibs are this accumulation. When you open up your software, guys, it's pretty outstanding how it works. Your software measures every move in the market up and down. Every move in the market, every pivot up and down. Large chart, small chart, it creates synthetic time frames. It projects forward. It looks backwards. Guys, there are thousands upon thousands of calculations. And if you spent several hours on 10 times frame, you could get these too. None whatsoever, Joel. And these are all of the calculations that come through. These are all the Fibonacci projections, retracements, stuff like that. From all of these calculations, the algorithm kicks in. And this is where I didn't realize my brother was this smart when we were young. It begins to sort them, to weigh them, to give them priority, to see where there's the most of them. And from all of this, we get these. So it makes sense that they may overrun every now and then. It makes sense that they may stop a tick or two short every now and then. So when I get this overrun, but then my small chart says, man, three divergences, it's probably overrun on that area. I start looking for short trades. And while it's not technically a strong top, the small chart confirms that it was probably a little bit of overrun. And then you start looking when the triggers roll for your opportunity. Does that make sense? Kind of cool, right? And sure enough, three divergences told the story, and down it goes. And now we're directly into support, and we have a ton of momentum. There's a lesson. What do you guys want to talk about? How's your day going? Who took a loser today and doesn't know why? Anybody? Not me, Mark. I don't take losers. All right, so I'm just gonna blab then. I want to give you guys a little insight into my world here. When I take a trade, we'll see if we can find a start to finish. Bum, bum, bum. When I take a trade, these are pictures I was taking. I take an entry before I'm ever filled. Can you guys, will this go any bigger? There we go. Just going to show you what my morning looks like. Why not? Here we go. I take a pre-picture to make sure my rules were met. I take a picture when I enter and identify any challenges that I may have. I talk about how I felt about it when the trade is over. I get mad because I missed my re-entry after a second higher divergence, so I take a picture of it saying, you were right, you just had to re-enter. There we go, picture of entry. Identifying areas mid-trade, taking profits at trouble. Watching it go up, taking pictures of my stop movement and why I'm doing it. Take a picture when it's over, go back, revisit it, looking at things. Okay, here's what I had, here's where I got in. This is what it said, my stop's in the right place. Indecision. Lessons with my brother. What I saw, where I got in, why I got in, where I got out. Guys, I take pictures all freaking day. I never have any doubts about what I saw or what I was doing because I go back and I write all over my charts. And I do it because I want to study it. I want to identify the mistakes that I'm making. It feels good to win. It does. It feels amazing to win. I want to know why I'm losing. If I'm taking trades, I want to know what I'm doing wrong. If I'm doing anything wrong. Sometimes I'm not. Sometimes trades just lose. But I will always go back and analyze because I want to know what's going on. All right. Kurt, were you listening to the lesson how there's that little bit of overrun? I just gave it. Where were you? We talked about how Fibonacci is born. That's okay, so let's do it. It's a perfect lesson. Fibonacci areas, Kurt. When you open software, I don't mind giving this lesson twice. It never hurts to hear anything twice. Your software analyzes every pivot in the market, Kurt. I mean every pivot. Every up, every down, and it does it on like 10 different time frames. And it projects forward and it goes backwards. And that's what it looks like. Like if you looked at the software without the sorting algorithm, these are all the measurements for Fibonacci. And then the software begins to weigh them and sort them and what's more important and where's the highest concentration and where are the best levels. And from all of these, you get this fib. So it makes sense that every now and then it may go a little bit over or it may stop a little bit under a tick or two, right? Because this one line is from like 2,000 lines. Are you with me so far, Kurt? So when I get 3 divergences in the same price range, right at a little overrun, I can say to myself, this is probably a pretty good looking top. They just had so much momentum, they pushed past it a little bit. The small chart lets me know, hey, we're good. And now it rolls. And you've got smalls below and large above. And then because of the mid-band with the weak, or because of the weak top, would the mid-band be a termination condition? A mid-band is never a termination condition based on the top, whether it's weak or whether it's strong. A mid-band is only a termination condition if the large triggers are a full bar away. That's when it's a termination condition, Kurt. But if it's a weak top, the mid-band is more likely to create a bounce, especially when there's a fib right there. So mine looks a little different than yours. We're probably in a different time frame. So for me, the 3 divergences says, all right, we're probably pushing down. The mid-band is probably my first spot for a bounce. Any sort of bounce. And when you couple it with support and no triggers through, it's even more likely to create a bounce. So that's kind of where I'm at on that. And I know that you're on MCL. Trade your charts. You have a 50-50 after 3 divergences. You've got split triggers, so you're going to have to make that decision, right? And one of the things that I like to do, Kurt, and I've said it 100 times in this room, and I'll say it one more time. The crude oil and MCL are 2 different markets, right? We can agree if you've done oops, I want MCL. If you've done any research on it, MCL follows the big market. It just does. If you watch it, 24-25, 24-25, the small market chases the big market. So if the big market has support, Kurt, if the big market has large triggers a full bar away, are you going to trust this one? Or are you going to say, but my tiny little insignificant smaller volume don't have money to trade people, they're going to lead the way, right? I love using the large market. And the same is true on the S&P. You had a termination here. 100% on crude. What did it look like on the MCL? Probably split triggers over here, but you're thinking 50-50 from 34, and maybe that large market gives you a little heads up. And then maybe that was an overrun. And notice how it closed the gap to the large triggers. So the gap theory on the large one keeps you out of it. That was the gap theory. We hit the mid band and support. Large triggers were a full bar away, and it closed the gap right to it. And then, Kurt, I know that you want your charts to all be the same market, right? I want MCL across the board. When I was trading micros, I had large contract lead the way. Why are you trading the micro? And don't answer it. I know the answer. You're trading the micro because you don't want to risk $10 a tick. You want to risk $1 a tick, right? Does it change the read? This is the one that says, hey, it may go down. So, and that's okay. But why not let the one that moves the market, why not let the one that's in charge lead the way? And you don't have to, but I can tell you from experience, it's easier to just use the small chart for execution to save the money, but let the large chart, the large contract lead the way. Bad top. 3 divergences said it's probably going to push down directly into terminations, closes the gap. Decisions are made, and none of them said down yet. Pretty cool, right? So if you just jumped in thinking, well, it's got to go down, you just got slaughtered. If you allow it to go down, you have a better chance. So, and again, Kurt, do whatever you want. But I think, just based on my own experience, that it's a little bit easier. So here's the S&P, and then let's just look, just for grins. The MES tends to be a little closer to the MS. I'm going to make my entry chart the MES here real quick. So large chart has that 50-50 look. Let's see what the MES has, see where its fibs are. At 1975, so it's very similar. But I have a fib here at 1975 as well. I'm into the mid band. The large triggers are almost a full bar away, so maybe not as much help on this one. Just stuff to think about. I want advantages. My trading revolves around advantages, and I think one of the advantages you can give yourself as a micro contract trader is to know what's happening on that bigger contract, because that's the one that the small contract is following. On crude oil, sometimes there'll be a 2 to 3 tick lag between the two, and it's almost like having a crystal ball. It's kind of fun. And here's another one of those ideas that we're only a tick or two off of the area. Is it close enough? Because this area is thousands of calculations. Whew, man, I feel like it was a good day today. I feel